I'm Judy Shaw for NYSE Floor Talk. Joining me today is Paula Campbell Roberts. She is the Managing Director and U.S. Consumer Economist at KKR. Paula, it is wonderful to have you on the show. Thanks for joining me today.
Lovely to be here with you, Judy. Thank you.
Thank you. So now, Paula, your paper focuses on shifts in consumer behavior post-pandemic.
Yes.
What were some of the key observations?
There were several. One, as we look back at consumer spending over the past 2 years, it's incredible to see how much consumer spending has really been supporting the economy. There were quarters in 2020 when consumer spending comprised over 100% of GDP, which meant the other sectors, of course, were contracting. In addition to that, as we look forward, despite the fact that the consumer has been sort of the major leg of growth, supporting growth, going forward, we actually expect that leg to come out and to start to soften. So that was a big insight that high-income consumer spending in particular, we expect to slow over the next 12 months.
Okay, so you describe inflation as being harmful and sticky. Can you walk us through the impact of inflation on consumer spending and housing?
Fundamentally, what happens with higher prices is a shrinking of the consumer wallet. So you can imagine real disposable income is negative for, it's I think down 4% this past quarter. That means that consumers have left money available to spend in different categories. What's different about inflation that we're seeing right now is it's not just focused on food and energy, but it's also in core categories, which is why we call them sticky. Mm-hmm. So we're looking at transportation costs, we're looking at housing. So again, that's less money available to spend in some other more discretionary areas, especially as we head into a potential downturn, which is what we expect over the next 12 months.
Okay. Now, what themes or sectors do you see benefiting from the changes in consumer behavior you've outlined? And where does KKR see opportunities?
For sure, I think there are always opportunities even when there's a slowdown. And in particular, where we're focused there is on areas like vehicle maintenance. Many consumers who either moved out to the suburbs or decided to forego public transportation purchased cars. And they either purchased used cars because of supply chain issues, or they paid a lot for newer cars. What we believe is that means they're going to hold on to those cars for longer, which means vehicle maintenance is going to become even more important. Another category is around personal care. It's interesting, if you look historically from recession to recession, in the 80s, personal care was actually a discretionary category that retrenched during recessions. But what we've seen in the past 3 or 4 recessions is actually personal care has become an essential. So especially post-COVID, where there's an increased focus on health and wellness, we expect that kind of spending to remain as well. And then a final category that I'll mention is, given the increase in mortgage rates that we've seen, almost 300 basis points since December, that's going to make housing even more unaffordable. So long term, we think rentership is a mega theme that we continue to lean into, and that should benefit both multifamily and single family. And then another related category is probably self-storage.
Mm-hmm. All right. Well, Paula, wonderful to talk with you. Thanks for sharing your observations with us.
Fantastic to be here, Judy. Thanks for having me.